Thanks very much, and good morning, everyone. Thanks for coming to hear about Caravel this morning. And yes, we're copper. We're a little bit more further along than Quinton, but we like copper as well. It's been a couple of years since I've actually presented here in the Gold Coast, and I'm pleased to therefore update you today on some of the progress we've made over that period of time. I think, as was mentioned in the introduction, we're about to publish a feasibility study. It's pretty rare for a junior to do that, and we're 3 months away from doing so. And I actually can't think of a better time to publish a feasibility study for a project that is going to produce copper. So just a friendly reminder that today's presentation does contain some forward-looking statements, so I'd encourage you to read this if you're considering a Caravel investment. So let me just start by recapping a little bit of the milestones over the last couple of years. Under the Approvals and Environment banner, we've been granted the mining license. A company called Western Power, a state-owned grid company, has given us the access offer to connect to the grid, so we don't have to build power generation. And we have submitted the key environmental document. We were just talking about approvals a minute ago. It's the key document for environmental approvals in Western Australia. That was submitted in draft form about a year ago, and the final one's just about to go in. So we're well progressed with in the last couple of years with approvals. The technical team, they've worked for the last 2 and even 3 years really since the PFS was published to de-risk the project. Updating mine plans, completing the MET test work, it is final, and also finalizing all the engineering designs needed for the DFS. And then moreover, on the corporate banner, we've signed land agreements, so we have all the land that we need to build the project. And we've entered into an MOU with Adani of India, where they have a brand new 500,000 ton a year copper smelter that they're in the process of commissioning. And we're aiming to enter into a binding term sheet with Adani as an off-taker. And through all of this, we've secured funding, mostly from Regal Royalty Fund, which was a $15 million funding package that's enabled us to get to DFS. So we're very pleased with our friends at Regal out of Melbourne. So just a quick snapshot. Our market cap's about 150 million. We have roughly 550 million shares on issue. Our register is really made up of the Paradise Fund, 2 private wealth desks of Canaccord and Ord Minnett. One of the landowners, there were 3 land packages that I mentioned that we have agreements entered into. One of those packages is a landowner who's also a shareholder, and the rest is management. Speaking of the team, this is our team. It's the full team. There's no one else. Well, there might be 2 people beyond this, but essentially you're seeing the majority of the team. We have experience across all the exploration that's been done in the last number of years, all the studies that are underway. I'm a construction person. There's Greg Lillyman up there is also a construction and operations person. So we've got quite a broad team of people that are ready to bring this thing through to development. And we've all been together as we've been building the DFS, so we all own the outcome. So maybe speaking a little bit more about the actual project, Caravel contains about 3 million tons of copper, but it also has associated silver, gold, and molybdenum. It's a porphyry copper. The resource is primarily in that graph there focused around Bindi and Dasher. The Dasher comes in around year 12. Bindi would be the first decade, but it extends for the full 25 years of mine life. And as you can see that on that illustration, that's about a 30-kilometer belt, and there's mineralization across that whole belt. So there's plenty of upside in terms of the resource. I think for me, being in projects around the world for pretty much my entire career, one of the most unique features of this project has got to be its location. It's only 150 kilometers from Perth, which means that almost all the infrastructure already exists, along with all the supporting services that we need to design, construct, operate, and maintain the facility. That's pretty unique. Most of the times, big porphyries are in the top of the Andes or in quite remote places. This is only 2 hours drive from Perth. And native title was settled, so if you had a question around native title, that was settled under state agreement in 2021. And there's lots of copper. There's enough there for 25 years at a production rate of about 65,000 tons a year with upside. It's probably worth presenting just a few benchmarks to put it into a little bit more context for you. This is a short list of copper projects from a list of, I think we're up to 380 copper projects in our database around the world. And this is sorted by those which are in feasibility study, those which contain more than 1 million tons of copper, and those which grade between 0.2 and 0.8% copper, which you might think is low, but I'll talk about that in a moment. So when you do use that criteria and sort the list, you only get 14 projects in the world. Only 5 of them, I would argue, are in Tier 1 jurisdictions, and there's only 1 in Australia, which is us. So it's kind of an interesting benchmark, I think, for yourselves. But it's not just about the contained copper. Longevity is important. I mentioned that Caravel's has an initial 25-year mine life, and it ranks 6th globally among all the undeveloped copper world. So we think it's a generational asset as well with the upside. This is a bit more on the mineral resource. The copper is of particular interest to the downstream smelters who are desperately searching for concentrate. Treatment and refining charges, if you follow what that is, they have been negative now for a couple of years. And remembering that certainly in my career of 30-odd years, we've never seen negative treatment and refining charges. That's how much in demand copper concentrate is for these downstream smelters. They're essentially paying you just to sell it to them instead of being charged to sell it to them. So it's a complete reversal. I think silver was mentioned earlier in Quinton's presentation. There's 50 million ounces of silver in this deposit, and there's about 1 million ounces of gold. So the precious metal streamers out of Toronto and Vancouver, they're all over us. They're all knocking on the door. And of course, molybdenum is in there. There's about 1,000 tons a year of molybdenum production, or 60,000 over the life, and that's of particular interest to the specialty steel makers in Europe, particularly ThyssenKrupp. So we've got the right combination of metals and, as I said, the right time. The mining method we're using, it's conventional bulk open pit mining, which is precisely what we do in the Pilbara. I spent the last 15 years building mines in the Pilbara, and you could say that that is our mining pedigree in Western Australia. We've got a very low strip ratio at 0.64 to 1 for the first 5 years, and life of mine's about 1.4, so quite low. And so what we do, just like in the Pilbara, is we drive our cutoff grade down, and then we bulk out the deposit. And then we use large equipment, which reduces our costs. And when we do that, we create profit margin. And that's what we do in the Pilbara, and it's what we're doing here at Caravel. So this is how we make money with a lower grade deposit. Bulk it out and drive your costs down. The illustration here is from the recently completed, designed by Mining Plus. Good outfit. Then we move to processing. We've deliberately kept it conventional to reduce the risk and to ensure that the operating hours can be achieved for a large plant. We've used standard equipment because operators and maintainers understand standard equipment. And the plant's designed with dual operating lines, again, to reduce risk. And that illustration is from the recently completed engineering design that came out of Primero for us. Location was mentioned. We're 10 kilometers from a 132 kV grid connection, which we have the offer to connect to. We have a 60-kilometer distance to a bore field, which is saline water, which means it's non-agricultural. We have access to all the established sealed roads and bulk export terminals at Geraldton and Bunbury. Fiber optic communication is already at site, which is important for autonomous or driverless trucks. And as I mentioned, the workforce is a couple hours from Perth, hence there's no FIFO on this project, which reduces costs. So just a minute on copper, the copper industry. This paragraphs is what I presented a couple of years ago here in the Gold Coast. It shows grades are declining and that new discoveries are not happening, and nothing has changed. Since 2 years, there's no new discoveries and grades continue to decline. So the reality is that mining companies need to move more rock for the same amount of metal, and therefore projects need scale to lower their costs and to come in production, which is exactly what Caravel could be. Maybe just take a bit of a long-term perspective or view on copper prices. I was very fortunate in my early career to be part of building the Collahuasi copper mine in Chile in the late 90s. Copper price was 70 cents back then and stayed flat for a long time until China began industrializing in 2004. and that's when the first wave of demand really came about. It peaked in 2011 when the stimulus incentives ended, and then demand dropped, and again, copper price dropped. But then in 2020, so 6 years now, if you can believe it, the renewable theme emerged. Lithium, hydrogen, rare earths, all being the focus. Copper is the latecomer, but we can certainly see that demand being stronger for longer for copper. And we think that there's a consensus pricing that's going to land in around $5.50, which is well above the 2020 view and in line with the long-term upward trend. So it's good metal to be in. We think that there's I mentioned 2 years ago as well, we think that there's a structural supply deficit that it's emerging, which again underpins the rise in copper prices to incentivize new developments like ours. That red line up there is demand. The dashed line, the bottom one, is the base case supply, and you can see that it comes off or it lowers as some of these older mines like Collahuasi end up being depleted. And the green line there is the interesting one because that's the line that includes a lot of speculative projects if they come into production. And you still see a gap. So even if half that demand happens, you're still going to just make the demand with the new supply, but it's likely there'll be a gap. We're going to produce 2 high-quality concentrates. The first one is likely to go to China, India, or Japan. It just makes sense. We're in the west coast of Australia. It's a short sail up to smelters, which in that region, 2/3 of the world's smelters are in China, India, and Japan. So hence our discussions with off-takers in these countries, in particular Adani. The molybdenum is likely to go to Europe, as I mentioned earlier, and you've noticed perhaps that we have a $200 million US funding proposal from KWF to sell the moly into Europe. Just a quick look at, these are the PFS financials, and I just wanted to throw this slide up to show that back in the PFS, look, the financials were robust. They were okay. They weren't hit it out of the park. But now, if you only change the copper price from $4 that we used 4 years ago almost, to today, the financials are very appealing. I mean, looking down the barrel of $13 billion of free cash flow and almost a $5 billion NPV with a payback of a large project of a couple of years, those are the kinds of numbers that the big end of town looks at and said, let's go for it. The DFS that's coming out in a couple of months, 3 months now roughly, we'll be able to update all the CapEx, the OpEx, and you'll see all the numbers. But that just gives you an indication of how leveraged this project is to copper price. What can you expect in the next 18 months? First of all, an updated mine plan and reserve statement that's going to come out in a couple of weeks. We'll release the DFS at the end of September, as we said. The environmental approval, we're aiming for middle of next year. We're about 60% of the way through that process. And of course, we'll keep looking for our JV partner and hope to have one in place towards the end of next year, if not sooner. We think all these activities are timed perfectly to deliver into a tight copper market. So to wrap up, we think it's the right deposit. It's certainly the right location. And it's certainly the right time also to be in copper and to bring a new mine into development. It's a long life resource in a tier 1 location. It uses proven and mining and processing methods. There's nothing new here. The studies and permitting are all well advanced, and our timing, as I said several times, fits well with the copper demand. Happy to take any questions out at the booth and hopefully enjoyed the update. Thank you very much.